Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. Warren Buffett is one of the greatest investors of all time, so it's probably a good idea to listen to some of his investing advice. One of the easiest is to invest in what you understand. The Oracle of Omaha is famous for having said, and I quote, "I get into enough trouble with things I think I know something about. Why in the world should I take a long or short position in something I don't know anything about?" Case in point, Buffett was not an early adopter of technology stocks like Google because he didn't understand how many of these companies would stay profitable and maintain a competitive edge. He eventually took some time to research some tech stocks and has added Amazon, Apple, Snowflake to Berkshire's portfolio. One overlooked tech stock that Buffett can easily understand is a leader in its field, continues to report strong financial results, has a rock-solid balance sheet, and stated a goal of returning capital to shareholders, is Spok Holdings Inc., traded on NASDAQ under symbol SPOK. John?
Yeah, thanks, Bill. Yeah, for Spok Holdings, it's all about technology, which maybe some of our viewers aren't even familiar with, and that's pagers. Through its subsidiary, Spok Inc., the company provides healthcare communication services to hospitals in the US, Canada, Europe, Australia, and the Middle East. Its customer base for hospitals, though healthcare does make up 85% of its revenue. Government, blue chip, and other account for the remaining 15%. Now, why are pagers such an important tool for hospitals? They're the safest, most reliable way actually for hospitals and doctors to communicate. They only need to be charged once every week or two, which means they're less likely to lose battery, and they don't need to be charged all the time like a cell phone does. Pagers are also more secure than cell phones. It's easy to send confidential information over text. It has long-standing customer relationships with many of the country's top hospitals, and the average tenure with its clients is 24 years. Now, the bonus or benefit of this is long-term contracts with its top customers provided with a reliable revenue. 80% plus of its revenue is reoccurring due to maintenance revenue from the contract center and wireless paging revenue.
Let's talk numbers here. This company reported another strong quarter.
Yeah, for the first quarter ended March 31st, 2024, Spok announced that total revenue increased slightly more than 5% year over year to around $35 million. Net income climbed 35% to 4.2 cents per share. Meanwhile, adjusted EBITDA rallied 39% on a sequential basis and 9% on an annual basis to 7.5 million. Now, here's the good thing. Ended the quarter with cash equivalents of $23.3 million and remains debt-free.
And I was reading that Spok returned $6.3 million to shareholders in the first quarter.
If you check out its investor presentations, management actually makes a point of saying that each goal is to run the business profitably and generate cash, which sure, every company wants to say. Fewer are still sitting on a pile of cash and have zero debt. With some of its cash, Spok returns capital to shareholders in the form of a reliable dividend. Now, since 2004, the company has returned over $680 million to shareholders. In 2022, it returned $25 million and increased the payout to $25.6 million in 2023. Now, in the first quarter of 2024, it returned $6.3 million to shareholders and payout of 0.3125 per share, and that works out to $1.25 per share on an annual basis for a pretty frothy yield of 8.7%.
Spok stock is up more than 20% over the last year.
Yeah, Spok stock has been performing relatively well over the last 2 years, rallying an impressive 165%, at least of this recording. It actually hit a new record high of $17.47 per share on March 4th, and now it has given up some short-term ground since then, trading at around $14.50 per share. This puts Spok stock up 23% over the last year, but down 3.5%. But the outlook for Spok Holdings remains pretty solid. In 2023, it reported diluted earnings per share of 77 cents, with analysts expecting that to rise to 81 cents per share this year and rising into 89 cents per share in 2025.
Thanks, John, for your insights. Just to recap, Spok Holdings Inc. is a healthcare stock we've been following for a while now, and for good reason. This company has a strong foothold in the health information services industry, enviable balance sheet, and it's reporting solid financial results. In the first quarter, it made excellent progress in several key performance areas, including revenue service growth, wireless trends, software operations booking, and backlog levels. Additional strong financial results should help juice a SPOK stock and allow it to continue to provide investors with reliable high-yield dividends. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.